The top tech ETFs to buy and hold forever. Technology has revolutionized our world, and its impact shows no signs of slowing down. From artificial intelligence and cloud computing to biotechnology and renewable energy, the tech sector is at the forefront of innovation. For investors seeking long-term growth and diversification, technology exchange-traded funds can be a powerful tool. In this video, we'll explore some of the top tech ETFs that have the potential to be core holdings in your investment portfolio for years to come. Be sure to stick around until the end of the video because the last tech ETF on the list has the largest year-to-date return out of all of the ETFs we'll be discussing today. With that being said, let's dive right in. Number 1. Technology Select Sector SPDR ETF. The Technology Select Sector SPDR ETF, known by its ticker symbol XLK, is an investment vehicle that has gained huge attention from investors. This ETF focuses exclusively on the technology sector within the S&P 500, making it a targeted way to gain exposure to the tech industry. XLK has delivered a solid 22.63% return year-to-date as of July 16, 2024, showcasing its strong performance in the current market environment. Additionally, it features a very low expense ratio of 0.09%, meaning investors pay just 90 US cents for every $1,000 invested, making it an economical choice for those looking to minimize costs. XLK's primary objective is to track the performance of technology companies within the S&P 500. Instead of including all 500 companies, XLK focuses on 65 specific companies. These companies are from different parts of the tech industry, such as hardware and storage providers, semiconductor companies, and IT services. However, the fund mainly invests in software companies, which make up over 37% of its investments. Next are semiconductor and equipment companies at nearly 29%, and technology hardware, storage, and peripherals at almost 23%. Given its nature as an S&P 500 tech fund, XLK includes some of the largest and most influential companies in the technology sector. Microsoft Corporation is the top holding, representing more than 22% of the fund, while Nvidia follows closely, accounting for approximately 20%. The top 10 companies in XLK make up more than 2/3 of its total investments. This means that investing in XLK is largely a bet on how well these major tech companies perform. Historically, this concentration has proven advantageous, as the technology sector has been a favorite in the stock market over the past decade. XLK has delivered impressive returns, with over 185% growth in the past 5 years. These high returns reflect the rapid growth and market dominance of the tech giants that comprise a large portion of the ETF. However, while XLK has performed well, its focus on a few large companies has important implications. Because XLK invests heavily in a small number of big companies, its success is closely linked to theirs. If companies like Microsoft, Nvidia, and Apple do well, XLK will likely also do well. But if these companies encounter problems or lose value, XLK's performance could suffer. Number 2. Vanguard Information Technology ETF. The Vanguard Information Technology ETF, also known by its ticker symbol VGT, stands as one of the largest sector-specific technology exchange-traded funds. With an impressive $73.5 billion in assets, it's a major player in the tech ETF landscape. One of the defining characteristics of VGT is its market weighting system. This approach means that larger companies, based on their market capitalization, constitute a bigger portion of the portfolio. Consequently, nearly 60% of the fund's total assets are concentrated in its top 10 holdings alone. Among these top holdings, Microsoft is particularly dominant, representing approximately 16.72% of the portfolio. Following closely is Apple, the second largest holding at 15.86%. Together, these two tech giants account for more than 30% of the fund's assets. This heavy focus on Microsoft and Apple highlights their key role in the tech sector and shows their strong performance and market leadership. VGT's investment strategy has several benefits. By concentrating on large, well-established tech companies, investors gain exposure to some of the most influential and financially strong players in the industry. These companies lead in innovation and show strong revenue growth and profitability, which can boost the fund's performance. Accordingly, VGT is known for its cost efficiency. The ETF charges an annual fee of just 0.1%, making it one of the cheaper options available for investors looking to gain exposure to the technology sector. This low expense ratio ensures that a larger portion of the investment returns is retained by the investors, enhancing their overall returns. The strong performance and strategic construction of VGT have not gone unnoticed. Morningstar, a respected investment research firm, has given this fund a 5-star rating along with a gold medal. This high rating reflects Morningstar's confidence in VGT's potential to outperform a relevant index or most of its peers over a market cycle. If you're enjoying this video, hit that like button, subscribe, and turn on notifications for more valuable content. Number 3. iShares US Tech Breakthrough Multi-Sector ETF. The iShares US Tech Breakthrough Multi-Sector ETF, also known by its ticker symbol TECB, invests in companies that are set to benefit from cutting-edge technologies. This makes it a good choice for those who want to take advantage of the latest tech advancements. TECB puts money into various sectors, including popular tech areas like robotics, artificial intelligence, cybersecurity, genomics, and immunology. Most of TECB's investments, more than 55%, are in IT companies. However, the fund also includes other sectors. About 14% of its portfolio is in communication services, showing its focus on digital connections and media. The healthcare sector makes up nearly 12%, investing in companies leading in medical technology, genomics, and immunology, emphasizing the fund's interest in advanced health innovations. Financials make up 7.6% of TECB's holdings, providing exposure to fintech companies that are transforming financial services through technology. The consumer discretionary sector, which constitutes 6.5% of the portfolio, includes companies leveraging technology to enhance consumer experiences and retail. Real estate and industrials are also represented, though to a lesser extent, with 2.3% and 1.8% of the portfolio, respectively. This diversification across sectors ensures that the investors are not overly reliant on a single industry, thereby spreading risk and enhancing potential returns. Despite its broad sector coverage, TECB still includes some of the biggest names in the tech industry. For example, NVIDIA, a leader in graphics processing units and AI technology, makes up 3.95% of the portfolio. Other prominent companies include Apple, Microsoft, Meta Platforms Inc., and Alphabet Inc., both of which are players in the communication and technology sectors. With a total of 173 holdings, TECB is less concentrated than many other tech-focused funds. The top 10 holdings account for 39.56% of the portfolio, which indicates a balanced approach where no single investment dominates. This diversified structure helps mitigate the risks associated with investing in high-growth, high-volatility sectors, while still providing significant exposure to potential industry leaders. Number 4. iShares US Technology ETF. The iShares US Technology ETF, also known by its ticker symbol IYW, is a fund that provides exposure to 131 American companies involved in the electronics, information technology, and computer software and hardware sectors. This ETF aims to capture the performance of a broad range of leading technology companies in the United States, making it an attractive option for investors seeking to capitalize on growth and innovation in the tech industry. The iShares US Technology ETF holds major tech giants that are widely respected and powerful: Microsoft, Apple, and NVIDIA. Together, these three companies make up nearly half of the ETF's investments. This shows how dominant and influential they are in the market. The ETF tracks the Russell 1000 Technology RIC 22.5/45 capped index. The name of the index indicates its approach to managing the composition and weight of the portfolio. The index has rules to avoid any one company dominating the portfolio too much, which helps reduce the risk of over-reliance. No single company can make up more than 22.5% of the portfolio, and all companies exceeding 4.5% individually cannot together exceed 45%. These rules aim to keep a well-rounded and varied exposure to the technology sector. However, in reality, the largest companies still have a big influence on the portfolio's overall performance. Despite capping rules, over 2/3 of IYW's portfolio is in its top 10 holdings, showing heavy reliance on a few key companies. This means the ETF provides some diversification, but is strongly influenced by these firms. Investors should note the fund's performance closely tracks these tech leaders' success. This concentration brings both advantages and risks. These firms are industry leaders with strong growth potential, yet any downturn in them could heavily impact the ETF. IYW's holdings focus mainly on software and services, crucial for personal and business computing. Semiconductors follow, benefiting from high demand in electronics, data centers, and AI. In 2023, the semiconductor sector, represented by companies like NVIDIA, has been especially prominent. The surge in demand for high-performance computing, graphic processing, and AI capabilities has propelled the growth in semiconductor companies, making this an exciting area within the broader technology landscape. Number 5. VanEck Semiconductor ETF. The VanEck Semiconductor ETF, also known by its ticker symbol SMH, stands out significantly in terms of year-to-date performance, outperforming many other funds. SMH has delivered phenomenal 57.42% return year-to-date as of July 16, 2024. This ETF is designed to track the MVIS US-listed Semiconductor 25 index, which focuses on the 25 largest and most liquid companies in the semiconductor industry that are listed on the US stock market. Semiconductors are vital in smartphones, computers, medical devices, and cars. Demand is strong due to high-performance computing, 5G, AI, and IoT growth. The ETF offers a way to invest in leading semiconductor firms poised for growth and expansion. The top holdings of the VanEck Semiconductor ETF include some of the biggest names in the industry: NVIDIA Corp., Taiwan Semiconductor Manufacturing Company, and Broadcom Inc. These companies are leaders in semiconductor technology, contributing significantly to advancements in areas such as artificial intelligence, computing, and communications. Approximately 73% of the ETF's portfolio is concentrated in its top 10 holdings. This means that the performance of these top companies heavily influence the overall performance of the ETF. While this concentration can lead to significant gains if these companies perform well, it also means that the ETF is more susceptible to volatility if any of these companies face challenges. However, it's essential to note the risks of concentration and market dynamics like supply chain issues, tech advances, and global economy changes. Investors should weigh these factors when considering the potential of the VanEck Semiconductor ETF. By investing in these ETFs, you can gain exposure to a broad range of tech companies driving the future. Make sure to research each ETF thoroughly and understand its holdings and investment objectives. This way, you can confidently choose the options that best align with your financial goals and risk tolerance. Which ETF piques your interest? Share your thoughts below in the comments section, and don't forget to like and subscribe for more valuable content. Also, feel free to watch the next video on the screen for more valuable insights. Thanks for watching.